Because, okay, you've been involved in this space for many, many years. And for people tuning in, how do you like to introduce the dry bulk market? Maybe from, the fundamentals first.
Yeah.
What are like because there's many moving pieces here, but maybe a bit not similar to tankers, obviously, because it's different dynamics. But still, when you hear about dry bulk, there's so much talk about China and stuff. But if you go one step back, the fundamentals and all the different products you carry, how do you like to introduce the market to people?
I think that this dry cargo has changed a lot over the last 10 years, and the investor base as well, they have gauged that. Again, back to New York, a lot of questions about Supramax, Panamax and Cape sizes. Where do you see the differential? Because you can't just buy dry anymore. It's changed. So I think for fundamentals for Cape size and Newcastlemax, we are looking very sharp. We have the lowest order book that we've seen in 30 years. It's amazing. If you look at the Panamaxes and Supramaxes, they still have 12, 13, 14% order book coming out for the next few years, which is quite significant. Cape size is below 8%. So fundamentals in the space that we are in at the moment is very good. In addition to that, we have an aging fleet, and we're quite lucky in dry bulk because when the market took off, the container market and the tanker market had already boomed before. So these are massive vessels, 210,000 deadweight tons. There's not too many yards left that are able to accommodate that sort of shipbuilding in space. So when the dry bulk owners saw that freight rates came up, and normally we build markets to death in shipping, that's what we're very good at. We see a high number and let's run to the yards. But this time around, we couldn't do that because the tankers and container slots were already booked. So dry bulk is struggling to get any meaningful fleet capacity over the next couple of years on the large sizes. If you look from the peak in 2008, 2009, only 60% less yard capacity today than it was back then. So I think the fundamentals for this is an aging fleet, difficult to build new ones, and owners are struggling on what to buy. Are you going to buy ammonia propulsion, LNG propulsion, methanol? Stick with the scrubbers. These are things that goes through ship owners' mind when they're going to place an order or not. And we're not going to be able to get delivery until 3-4 years ahead, which means they're going to have dead capital, 10-15% paid up front, which is dead money for now. So it's challenging. Good for us that already made the play in the right fashion. Fantastic. My job is quite easy when you come into two organizations that are already bought ships at the bottom of the cycle. So the fundamental looks good, and the company started out on a very, very right foot.
Seems like a very strong, fundamental story from, the fleet and the trend. How do you look at the specific cargoes? If you look at iron ore, coal, bauxite, what are like the main topics or trends that you're finding interesting there as well?
Yeah, no, on the large sizes, it's quite transparent. We know how many ships are on the water. We know how many ships for the first time ever that's actually coming the next 3-4 years. And the cargo flow as well is obviously important. I told you this before, but 5-6 years ago when you passed Cape of Good Hope and a ballaster from China, and you went towards Brazil, you were hoping that the Brazilian miners didn't take too much freight off you in that discussion. But now that we have the bauxite coming on, you have options. You can go up right to West Africa and pick up a cargo as well. And we see the impact on the bauxite has been tremendous over the last years. In 2019, 6% of the total commodity shipped on Newcastlemax and Capes were bauxite. Now it's 16 so far this year. So it's taking over more and more.
Did you see that early on? Or
yeah,
was
we were quite good with the bauxite development. We call that right so far. What we were very surprised about in the start of October last year with the coal, because normally coal has been a big impact on Cape size as well. I mentioned the bauxite has gone from 6% to 16%, but coal has gone from 20 to 13 again on the larger sizes. So coal, not because China is importing or consuming less coal to a certain extent, but because it's transported on smaller sizes. So we are spending a lot of time now focusing on the Panamax market, because what happened in Q4 last year was that the East Coast South America soybeans, US corn, which is traditionally a Panamax and Kamsarmax trade, China didn't want to buy. They had enough. So all of a sudden the Panamaxes are cannibalizing coal volumes, and the Cape sizes were wondering what was happening. So the bauxite has been a fantastic story and look to continue. We are also now getting into November, December soon, where the new Simandou iron ore mine in Guinea is opening up. tremendous volumes, 120 million tons ramping up over 2 years. Just for those volumes, you need 160% of the current order book to accommodate. So from going from one sort of long-haul leg in Atlantic 5, 6 years ago, we now will have 3. All ton-mile intensive. It takes 3.5 times longer time to go from China, West Africa, China, than to go China, Australia, China. So then the question then becomes, will it be additional tons to the market or replacement tons?
And is that a hard question to answer?
I think it's a hard question to answer, but I also think it's got really very much linked to the Chinese domestic iron ore production itself. But obviously, if it's replacement tons, you're going to have a great boost for freight because of the long distances. We talk about ton miles in Capes all the time. How much time does it take to transport a commodity from A to B? And how many ships are on the water? But if it's additional tons as well, then we're going to see fantastic freight rates for this segment. But this is also linked in, as I said, to the Chinese domestic production. 10 years ago, they produced about 1.3, 1.4 billion tons of iron ore in the country, with an iron content of around 40%. Now our sources say its iron ore content is 20%, and they produce only 900 million. And I think it's interesting to follow that the iron ore price has pretty much been around $100 per ton for the last two years. That means that the Chinese rather import high-grade iron ore long distances than producing themselves, which is great for shipping, obviously.
How important is the overall development in China in terms of how much they keep boosting their economy, or is that something you're thinking about, or do you think that China, I think Magnus Halvorsen said that China's never been the problem? So
he's been very right with that. China imported more iron ore and coal last year than they ever done before. So I think it's very skewed to say that China is over. The numbers show differently. But it's also very difficult to find data points that can verify a certain trend. So you come back to, if you believe China will continue to do what they're doing, this is going to be great. If it's going to be challenging with their steel production, how are they going to revive their property sector, etc. Right now they're doing great with manufacturing and infrastructure, which means that they still like the commodities. But to predict the longevity of China, they've been going strong for years, and I think they will continue to import and produce.
I saw a market story now was that, okay, West African has become very important, but now we're approaching rain season, so maybe the export volumes will decrease a couple of months. Yeah. Is that only on the margin, or something investors should calculate and look at weather forecasts?
It's a great question, but I have done success and busts on weather forecasts before. But in dry bulk for the big commodities, it's the general assumption is that Q1 historically has been quite tough, and that's because the Brazilian iron ore season, that's a low season, it's wet over there, they do maintenance. And before the bauxite, we didn't really have an alternative. Then the bauxite came on stream. The high season for bauxite is in Q1, and with the volumes that we see now, that sort of dip historically that we come into Q1, I don't believe we'll see that much more anymore, especially with the iron ore coming on stream there as well. I think we will have a more flat market over time instead of the quarterly cycles that we're used to seeing. But the bauxite is up 40% year over year, absolutely staggering volumes. And so far we ran the numbers yesterday, just still way above last year's levels at this time of year. So bauxite is looking good.
Very good. Are there any, big developments in mining companies or countries like Australia, Brazil that is interesting for people to look at, or some trends, or is it business as usual?
No, I think the trend, Brazil is going to expand their mines now, so they will, Vale, so they will be on stream with more volumes and tons over the next few years. The Australian mines are, some people argue that they are close to their peak, but still they're pumping out good volumes. I think this in the short term, it's more of a price issue than anything else, but at $100 a ton, all the miners are making good money, and the Chinese seems to have a solid appetite.
What are the other sort of interesting countries that could, become a more important importer? Are there any countries who can, in 5-10 years really have a strong development, like India or something similar?
India has been fantastic. I'm impressed. said a few years ago they're going to double their steel production from 2020 to 2030, and so far they're on target on that. And interesting with India is they've always been a net exporter of iron ore, then especially on the Supramaxes and Ultramaxes. But we've seen this year that they're actually importing iron ore from Brazil in cape sizes, I assume, to keep up with the steel production program. So India is massive, and they also need a lot of coal. They're also the world's largest cement producer. So they need 1.5 ton of coal to make 1 ton of cement. So in addition to the steel production they need coal for, they're also going to need that in their cement production. But India is not as big as China. So it's challenging to see that even though that country is doing great, if the brakes were put on a halt in China, India is not going to be able to be a buffer for that in large scale. Southeast Asia, booming. Vietnam, incredible, both on the steel imports and coal imports. So there's a lot of emerging markets there that look exciting. And also EU is coming back on stream after the lulls we had over COVID, etc. So steel production back up to the average we had over in 19 shortly. So it's looking good for the rest of the world as well.